영상 내용은 출연자 개인 견해이며 어떠한 투자 조언, 자문 권유가 아니므로 참고용으로만 봐주세요.
Hello, retail investors in South Korea. My name is William Rind, Will Rind, the founder and CEO of Granite Shares. We're an ETF issuer based in New York. So we're an asset management firm that specializes in the launch, the listing, and the management of exchange-traded funds. I think first and foremost, we look for investments that are enduring. So in other words, something that survives the test of time. Perhaps it's easier when you think of something like gold. It's been around for thousands of years and will be around for other thousands of years. But when it comes to investments in the income space or the yield space or individual stocks, we try and look for companies that not just are growing, but we think will create value for years to come. So those probably unsurprisingly are in some of the great investment themes of today, such as AI or cryptocurrencies. And we try and identify stocks that people not only want to invest in, but want to invest in with leverage as well. I think many people view the crypto companies as almost like a leverage play on cryptocurrencies themselves. Most famously, probably MicroStrategy, that has developed a business model around this principle. So for us, it was a way of providing leverage to companies that were involved in cryptocurrencies without actually providing exposure to cryptocurrency. Not that we have anything against it. It was more that we have other competitors in the market that were offering Bitcoin and other crypto ETFs, and it was a way for us easily to differentiate by offering leverage plays on MicroStrategy, on Coinbase, on some of the Bitcoin mining companies, Mara, etc. It's a great question. I think it's going to be not a one-size-fits-all answer. It's very much going to depend on the risk tolerance of the investor, the goals that they have, and ultimately their comfort level with taking risks. So these products typically, what we find, are used by investors who are very comfortable with risk and want that risk. And therefore, they might use up to, say, 30% of their portfolio in these sort of higher risk plays. And we sometimes view this strategy as a core and a satellite approach. And what that means is the core of your portfolio might be more boring, less risky investments. So it might be 60% of your portfolio or more. And then you might have a third or 40% of your portfolio that is for more risk-taking, alpha-generating strategies, of which leverage or yield or etc. come into that. For me, I'm pretty boring because the vast majority of everything pretty much I have is in the company. So I invest all my time and effort in Granite Shares. That being said, clearly I do have personal investments. So I own ETFs in my personal portfolio as well. Granite Shares is a real asset management company, which means that we manage the assets ourselves. Sometimes other ETF companies are more like marketing companies, and they don't actually manage money themselves. We're different in that we believe that there's value in not just marketing an investment, but by managing it and controlling that outcome for investors ourselves. And we believe that our portfolios and our performance is better or can be better because we're managing that ourselves. So in terms of risk management, that will depend on the strategy. So for example, if we're talking about a leveraged ETF that's designed to provide 2 times the return of NVIDIA or Tesla, for example, on a daily basis, we're managing that portfolio to deliver that return. From a risk management perspective, we have to make sure that we can achieve that objective irrespective of what the market is doing. For the yield boost products, what we're trying to do is generate high weekly yields, high weekly distributions. And we do that by executing what's called a bullish put spread strategy, which, to explain simply, means we sell a put option that generates the yield, and we simultaneously buy a put option, and that generates some downside protection on the underlying asset. So that is the strategy that we use to provide that combination of yield generation and downside protection for yield boost. I think that's certainly something that works for a lot of people and can be helpful in markets where perhaps fundamentals are not the primary reason to look at a stock. So you might look at a company like Palantir, and you might look at its valuation or its PE ratio, and you might think on a traditional valuation basis, that valuation number is high. So the reason for investing in the stock doesn't become fundamental. It becomes more about the chart and the pattern and the movement of the stock. And so I think that that is something that a lot of our investors use, both on the short side and the downside, and especially looking at shorter term movements where a stock might be breaking out, a stock might be hitting a particular resistance level and therefore is inclined to be sold. But there's certainly something that's very popular with a large group of traders and leveraged funds. I think this is very specific to individuals, because what we typically find is that investors will gravitate towards something that works for them. So for some people, that might be relative strength. For some people, that might be moving averages. For some people, it might be more fundamental. And there's no right or wrong answer here. It's just whatever makes sense to you and what works for your style of trading or investing.